What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and I know it's not Tuesday or Friday, but I had to get in front of you guys and make a quick update video to the previous video about QYLD. I value your opinions in the community very highly, and I love getting feedback from you guys, and I always want to be honest and transparent, especially when there were opportunities to make a video even better. I got some really great comments regarding how we handled the dividend, the static dividend with respect to the declining price growth, and I feel like there were some real opportunities here to at least introduce two additional potential options as to what might happen in the future with QYLD. This is going to be a quick in and out video here. I'm not going to take more than 5 or 6 minutes of your time, so let's go ahead and dive right in. Okay, so here from our Tuesday video, the original strategy we used in this, assuming we were dripping into the QYLD over 30 years, we were assuming the price would be going down over the long term at a price compound annual growth rate of 1.12% loss. So slowly going from here from October 2021, 22.91 all the way down over 30 years, the price would eventually come down here all the way down to around $16.40. Problem was we also kept the dividend static, and I do agree with some comments that said, well, we can't really do that because then the yield would be insanely high here, and I agree. So what we did is I went ahead and adjusted and created two new strategies. New strategy would be to take QYLD's history and just repeat it. With respect to the price, we took the actual price adjustments month over month and we just repeated them for the next 2 or 3 more times so that we got the exact same type of price history. And then with respect to the dividend, we took whatever the factor of the price was, whether it was a 1% adjustment here, 0.77% of the actual price, we took that and we extended it out for the full 30 years, just to get an idea of if QYLD did the exact same thing again that it did in the past, what would that look like? So that was strategy number 2. And then strategy number 3 here was we were going to modify our original strategy and say we're just going to keep the yield at whatever the price is at 11% annually. So we just took that same price history as their very first original strategy, a long, slow decline, and we said no matter what happens, we're going to keep the dividend at 11% annually. So 11% divided by 12 and said that was going to be the dividend every single month, depending on whatever the price was of QYLD. Neither of these strategies are perfect because we just don't know what's going to happen in the future, especially since we don't know what QYLD is going to do in a prolonged downturn. But nevertheless, I'm giving you two additional strategies here just to see what it would actually potentially look like. So in that second strategy here, assuming that QYLD were to extend out the exact same type of strategy, it would look something like this. Here, October 2021, and then bumping around here all the way from there down, all the way down here to April of 2051, we would be at a price of $14.51. And it would bump around along the way as opposed to just being a steady ride down. So let's first look at portfolio value between the 3 different strategies here. So strategy number 1 here is the original strategy that we were using. Strategy number 2 here, the one that's got a lot more bumps, ups and downs here, is if we took QYLD's price and dividend history based on a function of their price and said, let's just extend it out, whatever that 7-year price history was, whatever that 7-year dividend ratio was related to the price, we're just going to extend that out for another 3 or 4 times. That's what that one looks like. And then strategy number 3 right here, again, is the one where we are just making sure that the dividend yield stays at 11% annually no matter what the price. And assuming that same price trajectory downward, 1.12% annually down. We can see that we've got 2 much more conservative strategies here, right? So instead of being upwards of $3.5, $4 million here based on the $1,000 per month contribution, we're actually at closer to 1.5, 1.7. I mean, actually over $2 million here. Still a great ending number, but not as good as this one up here. And then strategy number 2 here was down here at right around $1.7 million. So definitely a significant adjustment downward. Here is strategy number 2, the annual dividend income. And in this situation, we can see $250, $500, and $1,000 a month in dividend income. We can see that this does look a little bit more realistic given the ups and downs of QYLD's actual dividend history. We would be up here right around $180,000 annually, best case scenario, 177. Then we would be at $88,000 annually based on $500 a month in year 30, and then we'd be at $44,000 here. And then strategy number 3 right here, we would be, this is again assuming the 11% annual dividend yield, at $1,000 a month, we'd be up here north of $200,000, at $500 a month at $114,000, and then at $250 a month contributions, we'd be at $57,000. This is the actual dividend yield here. This is what actually happened with QYLD. This is a little bit out of order, I'm sorry. But this is just to give you an idea of what the actual over time, what the dividend yield was compared to the actual price on a daily basis. We can see that it did ebb and flow a little bit here. This is the 250-day moving average right here, this trend line. But you can see that, you know, the dividend was kind of all over the place. That's just the reality with QYLD. We're gonna have a fluctuating dividend. And this right here just compares the 3 different strategies, assuming $1,000 a month in contributions. You can see that these 2 strategies, the ones we added, strategy number 2 and strategy number 3, are definitely much more conservative approaches that I think would be much more realistic. Sorry, I know I threw a bunch of data at you guys. If you're part of the Patreon community, you can get access to this spreadsheet. I did modify it so you guys can take a look at it, just to take your time a little bit and look at the different strategies and how this all works out, assuming a much more, I think, realistic dividend compared to what we are thinking QYLD might do in the future. If you want to join the Patreon, well, there's a link in the description below. Lots of extra dividend content for you guys, including a monthly dividend stock spreadsheet, access to all the updates I make to my own portfolio, as well as all of the spreadsheets that I use in all of my videos. You can join for as little as $5 a month. That's all I got for you guys in this video. A reminder, I've got my normal Friday video coming out tomorrow, in which we are taking a look at what we think, based on the fundamentals of how QYLD works, what do we think will actually happen in a prolonged market downturn with respect to how QYLD functions. If you want to make sure you don't miss that video, make sure to hit that subscribe button below. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.